Hello? Can you hear me? Okay, good. Yeah, the last webinar got messed up, man. I don't know what happened, but the sound is not there. So well, the picture got recorded, but I remember when I started the webinar, there was some problem, and I was pressing different buttons here there. So I think probably I just, um, I don't know. Mic was working because you guys were hearing me, but the sound, the recording of the sound was not there. The picture got recorded, but not the sound. So that's the reason that I didn't send it out because there's no use, it's no sound there. Only the chart and the mouse is moving and all of that. So, and that's why I decided to, okay, so let me do a webinar on Saturday as well, just to go over things and ask, help remove all the confusion and all that and answer all the questions. So yeah, let's get started. And how you all doing, by the way, over the weekend? Good? Having fun? Barbecue, stuff like that? Barbecue, barbecue Z, Barbie X, I don't know. Barbie only, maybe? Only Barbie, okay. Uh, uh, exactly, huh? That's exactly what I'm doing. I was doing. I am still doing. Today I have a leftover project, so I'm just gonna go and just do that. Yeah, I made a very nice, beautiful, big cat house as well. My own idea, like putting everything together and making like a nice house and canopy and this and that. The stupid cats comes in here, in my, flower beds and this and that, and then they do their, things there. So I don't want that. So I says, okay, let me make a separate house away from my area, the other corner of the yard. No, I'm not going for fishing lately, man. Yeah. All right, so let's get started and send me some questions. Anybody, any problem, anything at all? All right. Okay, Ben is asking if the 40-minute is the bullish or bearish candle. Does it change the direction of every single bullish or bearish candle on a 40-minute chart? All right. Now, the thing is, this system is not only about these blue and red candles and the reversal candle. Okay. The reason that I do the webinar and then we go over all these, scenarios and reasons for the price to move and in which direction it should be moving. For example, if we talk about Brexit news and coming in the wire on the wire and in the news all over and saying that people talking about that it's going to hurt Britain very much. Obviously, we understand that after that the pound is going to get hurt. Now, let me show you something here that, for example, we are here, right? And let's say this is CAD. I was looking at the other broker. For example, here, pound CAD, right? Now, pound CAD, when we started the week, we were down here. Okay, it's 9/11. Last Friday, and then 12 and 13 was Saturday, Sunday, and 14 the day started. Now, after looking at this, you're dropping from let's say it's 75.50, right? And 75.50 to 68.25. Let's say 68.50. So that's what, 700 pip. And how many days? It's 7, 9, 11, then 10, 9, 8, 7, and 5 probably. Then, okay, 4, right? And 5 and 6 was weekend, and then 7 is the one that the week started. So we started the week from here, right? And this is the highest of the week. It's a 73.30, 73. So let's say 73.50. 73.50 down to 68. How much? 550, right? Around 550 pip. Now, if you look at this, for example, a daily range of this pair, and then also that same indicator gives you the weekly range as well, right? Look at this one here. We have 60-day average range, 131, means this pair can move on a daily basis 131 pip, right? So let's say there are some good days and there are some bad days. So average out like 100 pip, right? So if it moves 100 pips a day, you have 5 days of trading. That's 500 pip, obviously. So week, maybe it will move 500 pip. But it'd be like going 100 pip to the upside, then 100 pip to the downside, then going 100 pip to the upside. We do not have pound or CAD news, especially CAD news, every single day. We have news, maybe once or twice a week, where you can see that maybe this happened or that happened, that in that country, and it affected the currency accordingly. Now, pound, for example, we were all the way down, pound CAD, right? And obviously, when over the weekend, I said that we're probably gonna retrace, pound probably gonna retrace, and we go back up, all pound pairs, because they all went down, right? So after dropping something like this, you must go back to maybe around the 50% or 61%. How much we already did? Now the idea is, we so far 38%, not even 50% right now, right? Now the idea is that on the daily, with the daily range, we also have a weekly range here. So it says here, right there, you see this average 26-week range is 350 pip, right? And the previous week we just calculated it 500, and this one is saying 532, so we were very close, right? So 500 pip, this 350 more than that. So now more volatility, yeah. Now then the current week range is 332, very close to this one. Before that was 532, right? So average out is 350 pip in per week. So when the week started, right? For example, if I say we're gonna be going back up a little bit to retrace this move, and then we know that the average weekly range is 350 pip. So you add from here 350 pip, and you want to see that which direction can it go. Now, can it go more to the downside 350 pip, or can it retrace this way 350 pip? The obvious answer is that we require a retracement, and then we're probably going to go. And especially when you see on a 20-minute chart that it has started to go up, then you can imagine that, okay, this probably going to end up somewhere 300 or 400 pip to the upside at the end of the week. If it continue going up and down and up and down, it's not going to go nowhere. That's like 100 pip range. And then the high to the bottom to the top, we probably end up doing 100 pip range for a week, which is not, this pair is not doing it. This pair at least is moving 350 pip in one of the direction, right? If we are here, either it's going to go down from here to the downside 350 pip or to the upside 350 pip. right? If it continue and the candle is going to move up and down, then we have a problem, right? Now, even then, let's say, for example, here, you know that it's been big drop and then we might end up going up there. So you rather take a short or long, right? Forget about my webinars. I'm not telling you anything and I'm not there, right? So you look at it and then you said, well, going short is risky now. Maybe going long is better because we need to go back to 61% or maybe at least 51% as a retracement. So anytime that it gives you a long reversal candle, and on a 20-minute chart, you have a long setup, you take that. And if it comes like it's a short one, for example, from here to here, we came down a little bit, right? Considerable amount of pippage, but you don't have to pull every single pip out of the market. Some moves you have to let them go because if you stick to your plan, to your strategy, you might have to miss or lose or not lose but miss or let go the trades in the opposite direction, which are not in your criteria of your plan. Your plan is to go up 350 or 400 pip to the upside. So every opportunity that will take you long or give you a long setup, you will take those. Short setup, ignore them. If you want to more risky trades, then you can do both way. But this is what I'm explaining, that every pair has a weekly range as well, right? And then we have to decide which way that the week will take us, up or down. What is the possibility? And then it will be very clear that which direction we're going to go. Okay. Okay, so weekly range will give you a pretty good idea what is going to happen. Now, you see that we are sitting at the TL, right? And this line I just draw here, 70.52. Do you know where it is? This is where it is. So we were down here, we went up. Now, looking at the weekly chart, what it is. If we are going to go to the upside, then another 350 or 400 pip to the upside, where the heck we going to end up? Here, let's say 325. 25, right? So add 400 pip in here. So we need what? 74.25. So 74.25 would be around here somewhere, right? So do we have any number or anything, and then does it make any sense? Or can we drop from here 70? I would say 70.50. Okay, 70.50. Let's say 350 or 400 to the downside. Then that would be 66.50. So again, we're gonna be going 66.50 right there, right? So if we can stay below this rising TL, then 350 or 400 pip to the downside, taking us to this level here, 67.21. Now we know that pound pairs retraced and pound is under pressure. So what is more possible? The probability is in which way? Probability, not possibility. Probability is that the more chances are, yeah, Syed, you're getting it now, man. All right. But where the heck were you yesterday? I was waiting for you. I logged in and I was like, waiting some, Bangla music, thinking that you're probably going to come. But you never showed up. Aha, Sayed was with his Barbie, huh? Okay. What? Right. You were barbecuing fish or just Barbie? Probably both. Okay. All right, I got it. I got it. All right, so let me know when you Let me know when you want to do the what's the next time, okay? You want to do it tonight? I mean, yeah, tonight. Yeah, not tonight. I mean, this evening, 7 o'clock. If you were in front of you, I send you the message, the email, and the message in the Skype. I was typing as well. Anyway, just give me the email and let me know if you want to do it today at 7 o'clock. Okay. So okay, today. All right, I'll wait for you. I'll come. Anyway, so now, so you understand, Ben? Is it any helpful information that if we can stay here, and then if the pound start getting hammered again this week, then we're probably going to end up 67.21, looking at the weekly range, how far it travels, and also the daily range. So you have both a scenario in hand that on a daily basis, this stupid pair can move around 100, 125 pip, right? Now, whenever you make an entry, start doing the calculation. If you are positive, then see that how many pips you already have traveled out of 100 pip. Let's say 100 is the average of the daily range average we take, and then you make a move when a pair has 30 pip traveled on a day already. So what's left? 70 pip. Okay, now you make a move. You made it and you're positive, and you go in your direction. If the move is slow and you are reaching like maybe U.S. session lunchtime, or maybe London closes time, and you're still like 65, 70 pip, you close the trade. But if you made an entry already in right around the London Open, or maybe a couple of hours in London Open, right? And now you have all night, I mean, all London session and the US session in hand, and the pair already traveled 50, 60 pip. So that day, you have a chance either the thing is going to go more than the daily range, right? Or it may go to finish the daily range in London session, and then the US session will come and retrace. So you have to be very careful. You have to be very vigilant with your SL, and around 60, 70 pip profit. Make sure that you manage, you stay on top of your trade, and as soon as it starts reversing, you can get out. And if it is going to go down more, for example, for that day, and if it gives you a nice proper setting again, a Magic IB setup, you can take it again, right? I have several days like where I had two entries and three entry in a pair, on a high volatility day. I get in and out, in and out, in and out, a couple of trades. So this is how it is. So pay attention to the daily range and the most probable direction, the what can happen. So I see that we broke below this TL, we went up, testing it right there, 70.52. If we can stay below it, and then 20-minute chart is going down, and then you find short setup, probably 67.21 or 67 is the one, that area you're gonna go, or maybe more to the downside, because the pressure is to the downside. So each and every pair, for example, if you look at the pound index, and the index is showing that it's under pressure, that means most of the pound pair are going to go down. So this is one of them that you do the calculation and says, okay, this is if we stay below 50, 70.52, by Friday we should be around 67.21 or even more, right? 350 pip or 400 pip. Sometime it goes to 500 pip, like last week, or like a week before the last week, at 530 pip. That's how it is. So look one by one, different pairs, and you will find a very good scenario. Okay, next question. Anybody? I cannot tell that if someone asking if I have a problem with broker stop hunting. Now they can do that, but honestly, our strategy is just bypassing that. If we have a setup, the broker cannot come and then take your SL out. If the broker alone, you need to understand this, okay? They cannot, for example, if this price is right now what? Right now, market opens up and the price is current price worldwide for this pair is 70.42. Now, any broker, if they want, they cannot open at 70, maybe 10, right? 70.10 is far from 70.42. Why would they do that? That's a different price. That's cheating. Everybody would know, and they would be out of business in no time, right? Uh, the regulators will get that, and then they throw. So what they do is the most they can do is that they can spread your spread, right? The difference. If it is 3 pip, time to time, what they do is that boom, 20 pip, 25 pip. And if you have your SL within that time, it hits. Now that usually happens. That's only when there is no volume, then they can do it. When it's a high volume, they don't do it because they are scared, because the regulator is gonna get them. All right, and there's a lot of big boys are on the line when the volume is high, and they're gonna come after them, right? So when the market is very slow, ranging, or no volume, you notice that the spread goes wide, right? Especially these pound pairs, big exotic pairs, they go like 20, sometimes 15 pip, 20 pip, right? So avoid. We don't not. I don't even have to say to avoid, because we don't trade in those times anyway. So in London session, you will see that they will not spread widen the spread for 10 pip or 12 pip or 15 pip. Usually their spread is a little bit higher than Euro USD USD, but not that high. And then a stop loss, even if your SL is hit, then if they have to go down, then you get another entry anyway right after that. How many times you have seen that, right? For example, here, let's say, see this, right? If you make an entry here, it goes up, and then the broker do any fishy thing or whatever, then boom, your SL is hit. But then what? And then what? How many times they're going to do that? You know what I'm saying? So stick to the rules, and you don't have to worry about that. They can, play a game. I already considered all of that before I made this system. All right. Okay. So I hope you understand now. And all right. Any other questions? Ayaz, Ben, Joey, anybody else? Francis, everything okay? Yeah, 20-minute is more reliable than 7 minutes. 7 minute is just like I said. I explained that in last. The 7 minute entry, either it is after that you have 20 and 40 in opposite direction, then you take the 7 minute off a 40-minute chart if 7 minute appears, right? Or from the turning points, where you don't have the setup, like a second degree setup, right? So if our price is all the way up, and you know that level is gonna give you a bounce, the price is gonna reversal. So right. So when it's dropping, take the 7 minute short, even though the 40 and the 20 everything is long. So you can take the 7 minute. Other than that, I don't bother with 7 minute, and 20 minutes are more reliable. Then again, Ben, if you know that this is what's happening, and then most of the time in one session, pair goes in only one direction. Like little wobble is, yes, it happens, the wobble, but the direction and the within the daily range from, let's say, from this here, this is okay, from here, the day started, and then you 100 pip you have to go. So it's not going to the downside. It gave you a reversal candle and you made an entry here. Don't think that this thing is going to drop from here and then go back up here and then it's going to go up here. So it will never reach 100 pip daily range. It will be just up and down and up and down. So the move started in this direction, then the rest make sure that it will go all the way to the daily range, to the upside, because there has to be a reason that it's start bouncing to the upside. Maybe it's a news, right? So once you have the move started, and it is because of a news, so the news is positive, the pound is getting strong, and obviously now you have no reason that day for the pound to get weaker, because pound news came out good, and that day, at least that day before people go to sleep and they change their mind, now they are made up their mind. They saw the news is good, pound is getting up, pound is going up and then getting strong, and everybody's gonna buy pound. So that particular date, everybody's gonna buy the pound. So, like you said, that sometimes it bounce here, and don't worry about that. Then, once you make an entry for the rest of the day, just keep an eye on the daily range and the level and the fib and the TL. Is there anything around the daily range, and then your target should be there. If it is going up and down, don't be bothered with that. Okay, that will happen. Why that happen? Because a lot of people, let's say somebody is playing with $500 million, so they're not gonna wait for the daily range. When the 20 pip, 25 pip, boom, they close the trade. So now the $500 million trade out of the market will pull back a little bit, right? Then they see that, okay, the pullback happened, then they get in again. Here we go in the same direction again. So the big shot, the big boys, they always do that. But all in all, every time the game now, let's say the good news came out, right? So the game is in between buying pound and closing the trade, buying pound and closing the trade, buying pound and closing the trade, never to sell the pound that day and closing the trade. You know what I'm saying? When it is coming down, that is not because the sellers are selling. It is because the buyers closing the trade and just a pullback. And they will see or wait for another opportunity to buy again that day. You understand? So everybody's keep buying, but time to time they are closing the big trades, and that's why you see a little bit of a bump in the move, right? It's just a down move. Don't think that the buyer's coming down and then the whole thing is going to drop now, unless there is a news, there is a reason. If there is no reason, why would they start selling the pound, right? So if they're buying, they will keep doing that. Buy, go up a little bit, 50 pip, close the trade. Make $10, $15 million, all right, breathe, have a cup of coffee, have a cigarette, right? So, and after that, it drops a little bit, they get in again. But on the buying side. So they will keep dragging until they know that the target is to the upside, or the weekly number or TL or SNR level, something, Fibonacci 61%, whatever, it's up there around the daily range, and this pair is can move so much, so they will keep pushing in that direction until either the daily range is over or the day itself is over. You understand? So this is why don't be bothered with this up and down move. If you concentrate only this up and down move, then trust me, the end result will be you will have no account. That's why I'm when I try to teach, that's what the extra things that you have to understand and learn, that this is how the market works and move. Now these candles and these setup, the setup is only to make an entry. For example, if everything has to go to the upside, fine, but I don't want you to get in here for long, or get in here for long, or here for long, because if you get in here for long, from here to here on a 20-minute chart is maybe 25, 30 pip. And if one standard lot, you are in minus $300, and that boils your blood pressure, right? And nobody wants that. So the setup is that it's confirming that okay, the direction that we set after the analysis that this pair should be going to the upside this week. First of all, that the correction from here, it bounced and I gave you a long setup. So that is a confirmation that yes, our analysis is good. We are on the right track. Plus, as soon as you get in, what happened? You are in the money. You're no negative. And then your SL is maximum 25 pip. So you prepared mentally that if my SL hit, I'll lose 25 pip. No problem, I'll wait. So if that happened, your blood pressure stays in the place. Right? It doesn't fluctuate. So because you mentally prepare, you put your SL 25 pip, yes, and you have. Now without the setup, you make an entry, you don't know where to put the SL and what's going on, and then you end up maybe having SL right here, and the price comes all the way down here for 75 or 100 pip negative. Then here goes the morale, and then the rest of the week will be all negative, and then you're going to make a lot of mistakes. When your morals are down, that's what you do. Mistakes over mistakes over mistakes. Right? So never push yourself into a trade. Have to have a reason, have to have a setup, have to meet all the conditions of the setup, and then only then you pull the trigger, put your SL, and be content that okay, the day started right here, it went up a little bit, it came down here and gave you a nice setup. So this, if consider this is the low of the day, and the price of this is 69.65, let's say, right? So 100 pip is 70.65. All right, so I will close 70.55, 65. So 70.65 is right there at the daily pivot. Well, if this pivot is that day or not, I don't know. But no, maybe not. So yeah. So this entry was on 9:15. Okay. So now this daily pivot is not for that day. So you know what I'm saying. So if you know that there is a level or something around 100 pip or maybe 130 pip you want to go, so that's almost 72. So did it go to 72? Sorry, 71. So yeah, 71 is right there, right? So all the way you hold on to it and you got 130 pip daily range. Pull out of this move and bye bye. Even if, let's say, you make an entry here, it goes up, it came down and took 25 pip off of you, right? Then you make an entry and then you make 75, 100 pip or 130 pip, that 125 pip, so you're still positive 100 pip. So this is how you do it. Every single day when the move starts, it starts in one direction because of the news, and then maybe there is no news, then the previous day news will work. For example, the previous day was positive, so we move to the upside and then we retrace. The next day comes, there is no pound news or CAD news. So what are you going to think? There's going to drop? No, because yesterday what happened, the pound good news pulled the pound to the upside, then it will continue going to the upside the next day because of the previous day news. All the way up, and then here goes a positive news for CAD, then that is going to pressure this pair, and then the pair will drop. Then the pound news good or the bad news for CAD will go up again. So this game happens every single day. So need to know what the day is bringing, and then usually it's the news, which is a schedule, or and then time to time we have out of nowhere somebody comes like finance minister, right? And then they come and they talk and they say something about it. Right now, used to be Marisa, Theresa May. I always say the opposite, and now it's Johnson, right? So they come and they say anything about Brexit, and here goes the price. start moving in the direction. So this is what happens now. Not have to be. The yellow line has to be. Okay, the question is that if the price has to be above, like this one here, this entry, so the price is not above the wave, if you call the wave involving the yellow and black line. But I took the entry because the yellow is still above the black line, and the whole thing, the price, those two lines are above the red. And all in all, you can see that, we are here, and the wave is in a line itself, yellow, then black, then white, and then the black and the red, something like that. So it's to the upside. Here it is, a line all the way, yellow, black, white, then black, and then red, right? That is clear sign that, so this is, the price is above the wave and everything. So this is like 100% perfect entry, but this is also 80% perfect entry. 80%, I would say that, and then the price came down here and then, going up. This was a good entry too, but it didn't work out. Maybe because of the time. Let's see. Yeah, see this 1700 hour, 56. And then even this one, see, my entry here is 1800 hour, which is not the usual time that I trade. But, when things are not moving in times, then you take a chance, and sometimes you get lucky. Even if you don't take that one, then you see this one is in London session. You understand? If I had not taken this one, then I would take this one, and that's a perfect London session. So you wait. But once you master, you can play around, but you don't try to play around right now. Okay, you become master of this, and you knows how to do this, how to do that, second degree and 7 minute and all that. Then you can play game, right? Like what Messi can do, you and I cannot do, right? In soccer, I'm talking about. So he can, do a lot of, weird tricks and all that, but we can't. We cannot even kick the ball right. So that's how it is. So yeah, so the idea is, Sayed, is that what is going to happen, what is more probable for that day. If you look at the Sunday webinar, the last Sunday webinar that I said, I did that, and I said the pound has dropped, and I even mentioned that also, that all pound pair is gonna drop, right? So they did. So, but they did a long, it's a big drop, right? The long way to the downside. So then I said on the webinar that now a very good chance that the pound is going to retrace, all pound pair going to go up. They did. They all went up, actually, not pound cat. They all went up, right? And if you go and take a look, for example, oh yeah, you're gonna get enough 20 minutes. Even if you get 2 or 3 right one, you will probably make 200-300 pip, bro. What's up? Let's see here, pound USD, right? So who didn't know that we were at 27.74 and may bounce last week? On Sunday webinar, go take a look. We see this new candle started here. So that's on the Sunday webinar, this new white candle was not even there. We ended up having this black candle to the downside, and that black candle was exactly at 27.74, and that's what I mentioned in the webinars, is that 27.74 is a nice area, and we might go back to 30.12 or something, right? We might gonna retrace a little bit, maybe 30.27 or 30.12 and something like that, and that's what happened exactly. So it's start to go up a little bit, right? And that's a weekly candle. We ended up here, and if you look at that 40-minute, and so this is a retracement. Do you think that is bullish? Look at the angle, the pressure, that the steepness, right? So definitely this is just a stupid retracement that this pair is trying to do, like it's just like a breather, right? After dropping big time. So this is, and then in our Forex term, what do they call this? Anybody? This. What is this here with this big pole and this thing here? What do they call normally? No, Joey. There is a term like different harmonic patterns have names. This also has a particular name. This style, this shape, either bullish or bearish. Very common, man. Where you guys live in Mars? You don't know that? Come on, the flag, the flag. Bullish flag, bearish flag. Never heard of that? What is this? All right, let me do this, okay? We go on Google and put bearish flag. It comes here, right? Do you see this here? You see this? This move here, this after this, and this is what happened. Right here, what are they showing? This is the bullish, just like the opposite. This is bearish, this is bullish. Right? No. And then look at this. What are we going to call this? This is going to the upside. This came down to the downside. Right? Okay. So, learn a little bit about this. Well, so they're not in my, well, I never thought of that, so I cannot blame anybody. This is the first time probably I'm talking, but these are just that regular term. I learned those when I was dealing with the regular. They don't belong to my system, but yes, knowing these still, the shape of these different things. Like for example, head and shoulder, right? We still use that head and shoulder. We know what it is. It's not a part of the system, but a pattern. A pattern is it's important that what's happening. Ending butterfly, head and shoulder pattern. So this is like bullish flag, bearish flag. They are powerful setups, and basically that's what we have right now. And have we touched that 38%? Not really. So we haven't touched the 38%. So now what it is that when the market opens up, it may try to go up to the this 3047 area, right, and touch the 32% and this area, and then it will still be a bearish flag and can drop, right? There's no rule for flag. I mean, it's just it just go to the upside around 38% or sometimes 50%, and then drop again. But you just have to be watching when the drop is going to come. Obviously, in the volume time, and obviously with the help of the news, right? And then, for example, you draw these TLs, and then pound CAD, we just saw that it is at the TL, and it was also making the same kind of thing. Bearish butterfly. I mean, not, what am I saying? Bearish flag, right? So be ready for that, right? So if that happened, even if you're sleeping, and if the pattern it broke down here, right, and it's here, don't you think that's gonna go up and then give you a short setup on a 20-minute chart? Yeah, it will. And for example, if you are too late, right, and then it dropped and it went up and it gave you a 20-minute setup and it's dropping again, but the daily range is still intact, and then you still have a little bit of room, maybe 40, 50 pip, 60 pip, and then you want to cash that out, and then try to look for your entry from the 7-minute chart. That is the third scenario that you can use the 7-minute chart. In case of you miss the 20-minute and the price already left the station, right? But you still have room for before your destination, and then you want to cash out that little bit of gap, 40, 50, 60 pip, you may find a 7-minute entry and then take your 30, 40, 50 pip and run from there, right? You can do that from there. But the idea for the 20-minute setup or the 7-minute setup is that as soon as you make a move, you make an entry, you go positive, you don't go negative. And even if you do, with the minimal loss, you can get out and then get in again and then recover, right? But the idea is that, let's say this one, it's strongly to the downside and going up, and then if you go short and then it goes up a little bit more and take you out, and then you find a 7-minute long set, don't take that. Don't be like going the opposite direction. You know that it is dropping, it's going to drop, so be careful. For now, I'm telling you now, the last week was, yes, okay, we're probably going to retrace a little bit and you go long. Yes, we went long a few pairs, I went long, and fine, we got some pippage going to the long side, but now it becomes dangerous, right? So tomorrow's session, we're going to talk about the setup and everything. This is one of them. All pound pairs probably going to make the turn to the downside again, and we're going to be looking for short from now on. Because they already started, right? So, for example, this one, when the day started going to start on Monday, or the Sunday evening on a Monday, then we're going to look for the pivot, where the pivot is and how much it is above or below the pivot. And from there on, we're going to take it. And then also, depending on what kind of news data we have scheduled, and keep an eye on the news. All the news, by the way, pound news. If you want to trade this pair, pound USD, then take a look at the pound and USD news. You have any news or anything? The other day, I made a big mistake. I made a very big mistake. I was short pound yen, and pretty, positive. And then I went to sleep, not knowing, or actually, I forgot that there was a big red news for pound, the rate news. Guess what happened? Lost everything. Not lost, but all the profit. My SL, the price came back and hit my SL. But then I got in again, and I'm still positive, right? But the thing is that if you are in the trade, and then you know that down the road, maybe 3 hours later, there is a big news coming in about any of the currency involving in that pair, get out from the trade before that time, because you never know when it's going to happen. Yeah, you may get lucky, and then the news comes out in your favor, and then the pair drop 100 pip more, depending on how far you are in the daily range, right? If the daily range is already done, then most likely the news is going to come out, and then it will retrace, basically. So in that scenario, you just definitely get out of the trade before the news happen. Even if after that it drops 100 pip more, who cares? You already got 80, 90 pip, 100 pip, that's it. For the day, you got your lunch or dinner, you are full. Thank you very much. Now, if they have, dessert or whatever, they can have it, right? So you are full, you got your dinner, go for a walk and go to sleep. That's it. All right. All right. Anybody? Any other question? Yeah, but what do you mean by that? If it will. Yeah. These levels are always the same. They're like like staircase. They're like ladder, and either you're going up, you're using those steps, and if you're coming down, you're using those steps. Okay. Okay, let's say if I have this, I did it like 15 minutes ago. pound USD, right? Then I went and I, for let's say for a bathroom break or something, I went out and I came back. And I know that this pair has a news, the pound news is around the corner, right? So this is how it takes. 1, 2, 3, 4, 5, 6, 7. Done. This is what the refreshment is, the refreshing the chart. If that bothers you, then trust me, the trading is not for you. Okay. If that bothers you to look at the right chart and get this, some good amount of money in your bank, hundreds of dollars, then, what are we doing here, right? Why? Because this indicator has a glitch in it. And the 20-minute chart doesn't change, but sometimes these candles, they do change. They don't give you, the printing. The printing is they are not right, so you're gonna miss the setup. For example, the price dropped from here to here, right? And they're here, and you don't refresh, then you see a straight line. While actually the price. Look, these are not based on the time. Every second the candle don't print. If the price doesn't move a certain amount, the candle don't print, right? So now the price goes up a little bit and make the setup, but it is not enough to print a new candle, then it's not gonna print and you're not gonna see the setup. Okay, if you refresh, then what it does is that it prints everything from the start, right? And then all the candles gets printed and you might see the setup. You understand? So those little moves, if they are missing because the amount of pippage somehow indicator reads it that it's not important to print another candle, that it wouldn't print. And you will see sometimes you'll see a big drop like that, but when you refresh, you will see the price has this and then this and then this, right? So what does that mean? That the price, the indicator is just did print those up move, right? So once you refresh, you get it. So that's what it is. I mean, if somebody tells me that it's only better, I wouldn't even ask the risk. I mean, the reason for that, and it's just keep doing it every 5 minutes. Because if one of those setup after doing that, if I get a good setup and then I can get in and make it's even 50 pip with the one standard lot is $500. I don't mind having that, right? Do you? All right. So yeah. So whenever you sit and then all whatever the pair that is concerned, you are concerned about that it might move that day or that night. Just keep refreshing and see what happens. Okay, you will see amazing results and amazing setups after that. At least it's a satisfaction and the confirmation that you are looking at the right candle. You no regret after that. If you don't do it and later on you find out that you didn't do it and you miss a very good setup, then that would be a big regret, and then you will be banging your head on the wall, or maybe your Barbie, right? Yeah, man. I was thinking to do the barbecue this weekend, but I end up, doing some artwork, right? I'm making these stupid shelves and all that on the walls, right? Coming up with my wild imagination. So, well, you have to get away and do something, right? Sometimes, and especially, like the social media and the cell phone and all that. I'm fed up with all that, to be honest with you. It's I see people just sitting and then going over different stupid videos and seeing this and seeing that and getting knowing about this guy and then the movie stars and the singer. What the heck? They have their own lives. Let them live. You go and live your own life. Do something. Right. Yeah, but it's like social media and then this cell phone is just taking the life away from humans. We have no idea. We think that the slavery is gone. We all became slaves now, big time. The whole humanity is the slave. Even a 5-year-old, I saw the video the other day on on the YouTube. It was probably like a 3-year-old baby, right? Having a cell phone and laughing. And as soon as the mother takes away the cell phone, he start crying like hell. And then the mother give him the cell phone back again, and he start laughing. Takes away the phone again and start crying and throwing his legs and hands all over the place. He's in love with the cell phone. So that's how it is. But anyway, any other question, bro? Everybody quiet now. What happened? Did I say something wrong? Even if I say something about that cell phone, people mind now. Right? So that's how it is. Okay, for cell phone is a very good thing. You have fun, this and that. All right. So be happy. Don't worry. Be happy. Just try. I mean, just try, right? Try to take away the cell phone from your wife and maybe your kids and see what happens. They will kick you out. They will kick you out of the house rather than they give you up the cell. Start everyday trading. All right, Sayed. So that's a good question, Sayed. All right. So now, every day, for example, Sunday, tomorrow we're gonna see which pair of what. We more or less know already now, right? So pound pair is probably gonna drop here. So we have the scenarios, we have the reasons, and then we have the setups, right? The bearish flag and this and that, and then bearish some kind of harmonic patterns, or maybe wave 5 going down in pound Aussie probably, right? Remember that pound Aussie? Let's go take a look at the pound Aussie now. That man, that Aussie dollar, I don't know, it's on God knows what. It's taking on drugs or something. It's not just coming down at all. It's keep going up, 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 up. We're gonna, all right, this one for example, right? So I gave this chart here to you guys that it's a wave 1, 2, 3, 4, and then it's kind of start to come down here, but usually wave 4 ends up sometimes very nasty wave, and that's what one of the the scenario probably here. This could be and then the Friday comes, so usually that's what happened on the Friday as well. But if this is going to play out like everything else, this is wave 4, then we're gonna go down here, right? So most probable route for the pound pairs is down. So we understand that over the weekend. Now you start the day. Let's say Sunday opens up, you let go, and then Monday, then when the London session opens, Monday night, Monday morning actually, AM times. Then you have in your mind already, or the chart you print out, you have on the next to you, or on your computer, whatever. I would rather say that you just print those setup charts, weekly setup or whatever, the direction that I give you before charts sometimes, right? Or maybe on the post on the Telegram that you can download and print them and have it. Because if you don't, then you will forget what kind of setup that I said there is. And obviously, if you forget, then you're not gonna look at the chart and miss the trade. So if you have it next to you, print it, you will remember. And then what do you look for? Longs? No. Pound pairs supposed to go down. Then we look for short in 20 minutes. So every time in the London session, pound Aussie, for example. So that's Aussie is also an Asian currency. So not even London session, but maybe you want to take a look at this pair when the market opens up on Sunday, right? Asian session. First comes Asian session, then London, and then US session, right? So you look at the Asian session, and maybe Aussie have any news. The first thing that you need, the news schedule, right? Go on a Bloomberg or First Factory or any, so many places, right? Different sites that you're gonna find your news schedule, right, for the week. So right after that, or before the news, not after the news, but before the news, that you get ready, you refresh your charts, right? And you can do it like I just showed you, that 4 charts in line here, and then refresh them, have them ready in line, and start to watch what's happening, either index or the pair. So let's say, for example, this is the if you don't want to say, okay, forget about the index, the news, pound news coming out, so you don't want to watch the index, you just want to see what the heck the pound Aussie setup is going to do. So we're supposed to go down, and this is and this is the 20-minute. What do we have here right now? What we end up having and making it what? Can you see it here on a 20-minute pound Aussie 20-minute short setup? Beautiful short setup, right? And then here you don't know. So if you refresh, then you will definitely know what kind of thing is this, right? Is it bullish here, or is it bearish? So it's kind of bullish, right? So when Sunday opens up, you never know what's happening, and maybe there is no news, so you are a little bit skeptical about that, if this 20-minute is going to really work out. Are we going to have any volume or not? Then you will find this one maybe will go down, and then you might want to just take this one. But I always avoid the London session, but the pound, not London, Asia, when the market starts on Sunday, right? So but the pound Aussie, like I said, the Aussie is Asian currency, and in Asian time it may move, especially if it has the news, right? And it's keep getting strong, and the pound, I'm expecting some weakness. So the short scenario is more feasible, right? So we have a short scenario. When the market opens up, it may be already played out, and we open up with a gap down. That's also a possibility. If not, then we're gonna open, and then you see, maybe you find yourself here, says, oh my God, the setup is already. But I just explained that if you miss the setup and the price has left the station, then you look at the 7-minute, that if it's down here, and then just wait for that it goes, and then give you a setup, and then continue to the downside, get in, right? So this is the scenario. These are the scenario that you have to look. You prepare your chart before the news of any kind. The news makes the difference. The news makes the chart or the price move. So let's say London session 4:30 pound news. So which pair you want to see? Or you want to see pound index first on one computer, and then keep switching between different pound pairs, okay? And you want to know that I have the scenario on a different, like for example here I have all of these. Here is this, let's say pound Aussie 40-20, and then pound yen 40-20, and then pound USD 40-20, and then pound CAD 40-20, all pound pair, and Euro Aussie, and all of that. So I'm keep switching. This is okay. What's happening here, and this pair, and this pair, and this pair? Switching between these pairs, and just keep watching. While I'm watching on the next other computer, I'm watching the index just before the pound news, where the index is going to go and show up. And as soon as the news comes out, that I see the 7-minute index chart going down, right? Forget about the setup. It's just going down. If it starts to go down, that means pound's bad news. Forget about it. You don't have to understand the news. Forget about it. Just remember the time of the news. So if it's going down, yes, okay. So that means that people start selling pound already. Now you are watching here for setup with your hawk eyes. Okay, what's happening here? They are going down. Okay, good. And then wait for that. It's confirmed that the news is making the pound weak tonight, right? So after that, you're not going to see that the price drop, right? And then give you a 20-minute setup right off the back. No, it's going to take some time, right? But the idea is that you are confirmed now that the index is dropping. The news came out. After the news, the reaction is negative and people are selling pound. All you got to do is wait for your proper setup. So you have those pound pairs open, alarm on, and you can do something else if you have to, but if not, just sit down and watch, and then wait for your setups. In the meantime, that's one thing that's done, and then you see all you're doing is waiting for your setup, right? But in the meantime, look, what is the next news, when it is, and which chart you need to be preparing, and then you start going there, and then make the full, all of this is set up, and then keep in mind that okay, this is the time, this is maybe tomorrow at 4 o'clock I have to watch euro pairs. I have to refresh all the charts and then watch the index on one computer, the pairs on the other computer, euro USD, euro Aussie, euro CAD, euro yen, and see what happened. And then maybe sometime what happened is that you have yen news in the evening, and then after 4 hours you have pound news and then euro news. So you probably, some of those days, you probably end up doing this 4 times a day. A lot of work, right? Yeah, but a lot of money as well. So every time you have a news about something, right? And we do the webinar. In the webinar, we know basically what the price, the direction or the patterns are there, right? For example, right now we see the bearish flags are building up in most of the pound pairs. So the idea is that they're going to go down, right? Also, the Aussie weakness supposed to come very soon. Aussie weakness, whatever the reason and whatever it's doing now, but it's just like becoming more and more due, right? Overdue, actually. But the thing is, remember one of these webinars I mentioned that it might not drop from here. It might continue going to the upside to the TL first, and then hit the TL and then drop. So it's a long distance to the upside. It's a long distance means because it looks small, but this is a monthly chart, right? So the weekly chart is this. The TL is way up there, somewhere here, 49.84. So this is, look at the indicator, completely opposite. There is no volume to go into the to the upside. It's badly indicating that it is going to drop, right? So the price going to the upside, the indicator says no, I'm not with you, buddy. Right? It is continue going in the opposite direction. Right, yeah. So that's why it's scaring me. And then you look, I'm right. It's like last 3 weeks. Last week before that, actually 4 weeks, we hit this 43.63 and keep dropping. So maybe this is it. Or if we break this, we're gonna fly big time, because this has become a very important number now, right? The sellers are defending this, and then buyers are pushing hard to break this to the upside. So it's like a big fight going on at 43.63. So whoever is going to prevail is like, one army is just crushing the other and then getting into the city and destroying everything, right? That's what happened. You have a fight going on, and then somebody is just gonna give up, and then the other one is just start winning, and that's it. They get in. So we're gonna burst open this area 43.63, and then may go to the upside. The next would be 45.10, and then pound Aussie goes poof to the downside, right? Yeah. So this is how it works. So yeah, so on a daily basis, you prepare yourself, you prepare the chart, whatever the news is coming out, and the news are always there. One of the currency will have the news. It doesn't matter even if yellow. The people need reason, excuse to open the trade. So even the yellow news, but So we also know that sometimes, for the whole day or maybe sometimes 2 days, the price do not move at all. News comes, nothing happens. So this is the strategy that will keep you safe from getting in the market unnecessarily. Because if you do not have a setup, the news comes out, the price doesn't move, then do we have a setup? No. If you don't have a setup, you're not going to move. If you have a setup, sometimes if you have a setup but it's not going to play out and then your SL hit, then count how many SL hit, how much you lose, and then in the next day or two, you're going to recover all of that anyway, easily. One of the winning trade will recover 4 or 5 losses, right? So this is how safe it is. This is strategy, but you must play by the rule. If you break the rule, then there's nothing at all, basically. Of course, that you look at the analysis. Okay, the analysis is one thing, but there are certain pairs which, like a ranging, right? If you look at the euro pound, it's just weekly chart is ranging. So and those kind of pair, you gotta take as a daily basis that when the volume comes and the news, which currency has a news schedule? Excuse me. So euro pound pair and it's ranging, and then there's a news schedule for pound, and you want to trade that pair, and then pound news comes out very worse than expected, let's say, right? And the pound starts slipping, then that pair will start moving to the upside, euro pound. So when it starts to move into the upside, so even if the scenario is to the downside, but since it's ranging, and you never know which way is supposed to go, but the news comes out bad for pound is getting weaker, euro pound will go up. Then you wait for the setup, put the alarm on, and then see if you get a setup. If you get a setup, then get in. Simple as that. But if you're gonna think more and more, then what if and what if and what if and what if, then you're gonna get confused. Don't think. It's a very simple thing. 4 or 5 steps. You follow those steps. That's all. Wait for the news, whatever the news coming in. Refresh your chart, set up your charts for that particular news, the currency. If it is Aussie news, right, at 9:30 Eastern time, maybe, then all the Aussie pairs, Aussie yen, Aussie Euro Aussie, pound Aussie, Aussie USD, Aussie CAD, Aussie franc, whatever you want to, 6, 7 Aussie pairs, and choose 4 of them, good one, right? And start watching them. So if the news comes out good, okay, like for example, that day what happened? I was short, right? And but I was very tired, so I went to sleep, not knowing that there was a news. I made a mistake. Everybody made a mistake, right? So there was, but it's the mistake could be negative and positive, right? You make a mistake, but it's still a positive mistake. It's okay. But if you make a negative mistakes and a lot of them, then you're in trouble, right? So if you make a mistake but you don't get hurt, that's fine. But if you make a mistake that you forgot to take the trade, that's fine. That's positive mistake because you don't get hurt, right? So you forgot to take the trade, but you didn't lose anything. That's how it is. But if you forgot to put the SL and the price goes negative 100 points against you, that's a negative mistake, right? So don't do that. So yeah, so you keep doing that, and be ready, and that's about it. There is nothing else. And you're gonna see a lot of, like Sayed, you were asking me how many. It's a lot of them, Maybe 10, 15, 20 setups in. If you're talking about 5, 6 pairs, you will find that many entries easily, and more pairs, more entries. Sometimes multiple entries in a day. Right? The big movers, they give you multiple entries as well on a 20-minute chart. Forget about the 7-minute chart. You have entry every step of the way, right? Every 10 pip you have an entry. But that chart is a little bit risky. A 7-minute, and only, like I mentioned, 3 places, 3 times. you use that. Then you rather wait for a 20-minute setup, show up, and then take that. That's more reliable and more. It goes a long way as well. All right. So yeah. Just follow 20 minutes. The first master the 20 minute, and then believe me, if you can catch the only 3 or 4 setup in a whole week, you will do just fine. But remember, every night, get in and get out before the news, especially before the next news, because that could take everything in the opposite direction. So if you are, positive or making, and profit 100%, 100 pips, the news comes out negative in the opposite direction, then poof, the price moves the other side, and all the profit you had is gone. That happened to me, Thursday or Friday with pound yen. I don't know what I was thinking. I mean, I was probably busy building the cat house. So the idea that the information slipped through my mind that there was a rate decision, rate news for the pound. Yep. So yeah, now there's a lot of cats out there. Neighbor's cat, this, that, and few cats in the backyard, few in the front. So they come and then I start feeding them, right? So now they are always like, as soon as I go outside, meow. So I said, okay, So now I end up buying big bags of food, cat food now, and then every now and then I have to. Now it's become my duty that just go out and then give a scoop outside, and then throw one scoop in the backyard, right? So they are like, having feast on my money. So okay, no problem. I feel good doing that. God feed us. We need to feed other creatures, right? Human as well as animals. Anyways, I'm gonna close it now. It's like 5:20 now, right? So it's an hour and 20 minutes. I don't want to mess up this recording as well. And yeah, and then I'm probably gonna do it like a couple of these webinars for SNR. I mean, not SNR, it's QA session, right? Q&A sessions, a couple of, and then whatever the questions or difficulty or any concern that you have, write it down, right? And the next Q&A, maybe when I don't do that, for example, Sunday, Monday, Tuesday, Wednesday, I do the regular webinar. I'm going to do it tomorrow, right? And then after that, so maybe Tuesday, I'll do it again, Q&A session, where you can ask questions and we go over for the area of concern. And then the Wednesday will the regular webinar, and then maybe not Thursday or maybe Friday or Saturday, just like this one. We can do another one for Q&A, and then the regular session on Sunday for the setups and analysis, right? So more things will be clear that way. How about that, right? So yeah, so I'm gonna make set up for the next tomorrow's webinar and then send out. And let's see. I hope that the recording of this one goes well. And as soon as I upload it, I'm gonna check it. If it's everything fine, then I'll send it out. All right. In the meantime, like I said, write the questions down and either send me on the email or wait for the next session that we're gonna do Q&A, and then we will take it from there. All right. So bye for now, and have a wonderful, wonderful barbecue or Barbie, whatever you have. All right. Bye for now and take care.